Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Monday, March 7th. Stocks on Wall Street opened modestly higher despite another big increase in oil prices. Light sweet crude is now trading well above $106 a barrel on continued fears that the violence in Libya will spread to other oil-producing nations in the region. Concerns that persistent high energy prices will damage the economic recovery may prompt the Obama administration to consider tapping into the U.S. oil reserves. That's according to White House Chief of Staff Bill Daley on NBC's Meet the Press yesterday. Precious metals have also benefited from the rally in commodities because they offer a perceived safe haven for investors. Gold is now trading around $1,440 an ounce, and silver is above $36 an ounce, up nearly 3% today.
Higher commodity prices usually mean a declining U.S. dollar, and that's definitely the case today. The greenback is falling against other major currencies and is now at its lowest level of the year against the euro. The euro took a brief hit earlier this morning after Moody's investor service downgraded Greece's sovereign debt, but it has since rebounded. Moody's cut Greece's rating by 3 whole notches on concerns that it may eventually default on its debt. But currency investors are more focused on Europe's monetary policy. They expect that the central bank will raise interest rates next month after ECB President Jean-Claude Trichet said policymakers must remain vigilant against inflation.
Central bankers here in the U.S. are also concerned about higher prices, but they've shown no indication that they're willing to raise interest rates anytime soon. Atlanta Federal Reserve Bank President Dennis Lockhart said this morning that the economic recovery is still too fragile to allow companies to pass higher input prices on to customers. He also commented that he would be flexible on the question of whether the Fed should institute another round of asset purchases when the current round of quantitative easing ends in June. Lockhart said that his first instinct is to be very cautious about additional purchases. Dallas Fed President Richard Fisher took a much more hawkish tone in comments to an international bankers trade group today. He said he may vote to curtail the $600 billion bond buying program before it ends in June. Fisher has previously said he was opposed to QE2, but only became a voting member of the Federal Open Market Committee in January.
In corporate news, the technology sector is likely to be in focus, with big stock movers to both the upside and the downside. Shares of Western Digital are soaring nearly 15% after it agreed to buy Hitachi Global Storage Technologies, a unit of the Japanese technology giant. The cash and stock deal is valued at about $4.3 billion. Ciena is trading lower this morning, now down more than 2%. The communication equipment maker posted a wider loss than it did in the same period a year ago, and projected revenue for the current quarter that was below Wall Street forecasts. And finally, keep an eye on restaurant chain operator Brinker International today. UBS upgraded the stock from neutral to buy and raised its 12-month price target by $7 a share, saying sales are stabilizing at the company's Chili restaurants. Shares of Brinker are jumping more than 5% on the news. That's the latest from Weiss Research. Have a great trading day.